Hello everyone, this is Rishi here. As we bid goodbye to the year 2016, let's evaluate what the Nifty futures did through the year. In this video post titled Markets in Profile Nifty Futures by 2016 and Welcome 2017, a technical outlook. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. This video is for education purpose only. Any levels, indicators or strategies discussed here are meant for education only and not a recommendation to trade. Past performance or simulated results are not a guarantee of future results. Please consult your personal financial advisor before entering any trades based on the information presented in this video. We will not be liable for the resulting profits or losses. So first, as we have named it markets in profile, let's have a look at the monthly profiles. Now, I am not a fan of time based profiles, and especially when we go into week, month, and year, because you might not get balances or a P shape or a B shape always when you constrain the auction with a particular time, because the two-way auction process keeps on going, continuing till it finds an opposite force to end and begin to auction on the opposite side. Now, if we plot monthly profiles, it is not necessarily that any auction beginning at a particular time would end in that month only. A long term auction can continue for months and months together and is not necessary that it will end in a particular month. And also, it is not necessary that the auction begins at the first date of the month and ends on the last day of the month. That is also not a compulsion. So, evaluating monthly profiles would be like incomplete information. As far as there is no shape, there is no balance, it is almost worthless. But if there is a balance, then it is as precious as it can be. Now, for an example, if you see this balance, now if this was filled, this balance would have been very good. But in this case, you get a nice gradation at the bottom, and the point of control is right here because this is the fairest price, up price through which all the days have gone through. So each day in this month, this price was visited, or if not each day, the maximum number of days this price was visited, and hence this became the fairest price or the point of control. Now, if this was filled, it would have become a very nice balance. If we leave out this area, it would become a Gaussian shape and a bell curve. But here again, that's not the case. Though this, there is one valuable information in this, that you have almost two prominent point of controls. I would take this as another balance, this as another balance, and next month I would see what happens around these levels. So next month what happens is you get a nice balance here. Now, this, though this is a monthly profile, you have one balance, then again you have a nice balance here, the second balance, you have a nice balance here with a bit of anomaly, so a third balance, and again fourth minor balance, fifth minor balance, and sixth minor balance. So there are like six balances within that month. Each balance is telling a different story, and if I would wait for this month to complete, because see this month, if I wait that it goes into the VH and then I create a short, I would be missing this entire opportunity from the highs. And those who would have seen the September end video, we were discussing that the auction had already given up by leaving this balance on the upside. So when you leave out the time factor from the analysis, what happens is you are just playing with the value created within any time. You don't want to take a particular day or a week or a month. So take any time you see a balance, because uh, the balance itself consists of TPOs, or in other words, to create a balance, the auction needs to take time in a particular price range. Now, second month tries to probe into this and creates another balance just above the point of control, and then gives up, starts its move down. Again, there is a prominent point of control here. It visits that, but all this is again the same, like indefinite information, which cannot be used as a trade reference always. So I prefer to use, like, if you want to see, candlesticks would give better idea of a balance. You don't even need to get into these monthly and weekly profiles. And finally, after breaking down, you see there is all irregular profiles. There's nothing, no value in this. This has a bit of value because a very nice shape forming here, and the fairest price being 8186, and Nifty futures ended the year at just a point above this price, and that is it took the fairest price of that month and almost ended there. Now let's get into the monthly chart first and see the background of the auction, why it came there, and why it behaved like it behaved. So for that, what I've done is, this is a volume profile, and a volume profile beginning from the lows of 4538 in December 2011 and coming up till the last day of trading of December 2016. So in that, if you can see, though the software is bound to show you a 70% standard deviation of volume. So the volume, one standard deviation of the volume distributed across all these prices is, the software is compelled to show that. And the point of control stays lower at 5708, and the value area low is right at the lows, and value area high approximately 77940 kind of levels. Now if you can see, there is a almost a clean balance, because in volume on such a big time frame, we'll never get like a clean curve. There'll be peaks and valleys within. But if you see, there is if you see this valley is huge, again a huge peak, again a valley. So this is like, cannot be considered the same auction. It is a different part. Maybe the market changed its behavior, a fresh auction started from there, and hence left this unauctioned area. So similar to the monthly profiles we were seeing, we would consider this as one balance. So if we consider this as one balance, it would have started here, and you can see that this is almost a replica of this. So starting in May 2014, when we got that huge move up after the Lok Sabha election poll results, and then continuing till now, so till December 2016. Now, from May 2014, we have a one time framing market. This is a monthly chart, and we have 6, 7 months of one time framing, going on making higher highs and higher lows. Now, this month made a, a low which is lower than the previous month, but the high is higher. So, still, we'll consider that as one time framing up. All of a sudden, the market goes into a balance. Balance is basically a price range with overlapping price bars. Generally, the body is overlapping each other, and it can be 2 bars, 3 bars, but we'll require at least 2 bars to form a balance. So, if you consider this as a balance, uh, it breaks out from that balance, tries to create another balance on the upside, fails, and comes back into this balance. So, it's very easy to see this visually instead of getting into the value area stuff of monthly or daily or weekly. So, those who have candlesticks, almost everyone doing technical analysis would be having and watching candlestick charts. So, they can just change the time frames, look for overlapping bars, create a box there, and you are done. The balance is there. Don't need to do anything else, like draw this, consider this as a Ferris price, and you see what happens. The market tries to push back into this balance again after breaking down, and then starts its move down. Now, when this budget day, after this budget day lows, you have a engulfing bar, a bullish engulfing on the monthly. Obviously, we'll not wait for the monthly to enter the trade, but just to uh, get clear with the background. So again, we have 1, 2, 3, 4, 5, 6 months of one time framing market, and then, as we spoke about the reversal in the September video, we'll drill down to the weekly and see why that reversal happened. And now we have a one time framing market which is trending down. So the monthly is making lower highs and lower lows, and till it is making lower highs and lower lows on the monthly, the long term money is still selling, because you need constant selling efforts from long term serious money. Otherwise, the market won't be able to trend continuously in one direction. And this is a clean sign that they are selling this market one way, and as soon as they see a rise, they wait for a advantageous price and again get short. So uh, there might be bounces for 3 4 days or even 1 2 weeks, because those time frame guys are seeing some value in buying lower, and when they see that it is hitting the supply zone of a time frame which is higher than what they are trading, they would exit or book profits at that point, which is completely fine, because uh, everyone's time frame of trading is different. And the guys who must have sold at the highs and are expecting much lower levels would be patient guys with some serious money, want to make invest once, goes down further, they want to push it down, they would sell more, and they want to take the entire cream out of this market. Now, let's drill to the weekly chart. delete. Okay, so same way, like we were seeing a balance on the monthly, you see this is a balance on the weekly. Goes out, leaves this as an excess, so this is done, and starts its move down. Now don't go on this line, because this is a positional system which I use for positional trades. It's a stop and reverse positional trading system, so I'm always in trade through this. And excuse me, there are certain rules attached with this system, that once it deviates too much away from this line, is the time to book part profits and hedge the positions when it is deviating too much. And in the same way, if you were using a moving average line, either you would keep a filter of something. So if you see here, it is closing below this line, but the color doesn't change, because it is programmed in a way that only if there is a one time frame lower and one time frame higher both get in sync at that point, then only the colors would change. Otherwise the color won't change. And if you can see here also, it tried to pierce through that, but the color is not changing, because till two time frames are not in sync, this will keep you in the trade, hence reducing the whipsaws. So, but this has nothing to do. It is just that I have programmed that logic. What I am talking is exactly what is being programmed in this indicator. So it's one and the same thing. So those who want to trade in that pattern, trade a complete swing of a trend, can do so by just following these simple balance rules. You see a balance, breaks out, comes back into balance. Now again you see there is a balance forming. This one is a balance, is unable to push through that, again forms a balance. So now this huge balance is forming, and I would consider these bodies, and then consider the fairest price as the price through which the auction has traveled the most. So this is the fairest price, breaks down from that, keeps on trending down, again trending down, a hammer which goes into the reference level. So the important point here is the reference level. Let's delete all this and go back and check. So this is this VH which it has hit, and goes and close within the range. So now this again is forming a balance. So when you see this kind of balance, first is you want to mark this balance. Let's mark it. So for me, till this was forming, this area is of interest, and I want to see what happens here. Then I want to go back and see if there was a higher balance somewhere in this zone, because see, when it is going here, I want to make sure that if the trend changes this high, I would be buying at a very bad location and a bad price. Because if we got a confirmation somewhere here, at least we are very few points off the lows. But if we get a confirmation here, it is like you are getting a confirmation midway of the trend, and I don't prefer to do that. I prefer to trade at the edges, so that the risk is minimal. So here we would like to go back and see if there is any balance in this zone, and the best possible balance you can see is this, where the bodies are, you see spikes everywhere, and this altogether would become a nice bell curve, with the fairest price being this. And if you see, the highs are getting almost there. This is not a straight line, but if we draw a straight line, it will be almost there. I can draw a reference line actually on the chart. This is the point, and we draw a line here. So this one is here. Then again you see this is a 2 bar balance and the mid of the point. So we draw a line there as well. So this is the area where it is trying to create something, accept or reject, and either change the trend or continue its trend down. Now let's delete the drawing and see what happened here. Now you have a balance already here. It tries to push into this, fails and comes back down, breaks this low. Again does not find anything here. Now one thing is getting clearer, that earlier there was a nice balance here, there is a nice balance here, there is a nice balance here, there is a nice balance here as well. So this is a very thick area, was accepted earlier. So it is like 1 2 3 4 5 6 weeks of this broad range. Then again 1 2 3 4 5 6 7 8 9 weeks of this broad range. Again 1 2 3 4 5 and 6 weeks, and 1 2 3 4 weeks. So altogether 10 weeks of almost a similar range. So this is a very thick zone, very fairly traded, and that's why it is facing trouble pushing through this. Once it starts accepting within, the chances are very high that it will push through in one go, because either it will get stuck and start rotating into this and build value again, do the same behavior, or what it will do is, once it accepts here for a while, so what it will do is create a minor balance by trading within a very narrow range, and then finally break down and push through this entire balance in one go. uh, those kind of moves are very fast. Like see here, you see this one go, it pushed through this balance. This entire balance was covered in just one push. So that is the way the auction always behaves most of the times. When orderly auction tends to push through a populated area either in one go, or would get scrambled within that zone and will keep on rotating up and down multiple times, because it finds it hard to leave that area and reverse back. But in this case, what it is doing is it's just trying to penetrate through and rejecting and coming back up. So now what we want to see is what can be the likely scenario going forward. Till now we were just looking at how this developed and what was happening. Now we want to see what can happen, and the likelihood of pushing through this is as good as the likelihood of going back into this balance. So let's consider this balance. Let's consider this balance. And let's consider this balance. So once it starts accepting above this price, and hence I tweeted that we'll get the reference level down for the long term reversal. Now 8195, the market has pushed once already above that 8195, and instantly like gave up and asserted itself that okay, as of now it doesn't want to go up. But we don't know what will happen in Jan, the first trading day of Jan. We don't know what will happen. And I would take 8195 as a reference, but we'll keep a close watch what happens in this entire zone. So 8195 to almost 8270. Now obviously I don't want to keep on adding shots higher and keep on averaging in a hope that okay it might go here and reject. That if that doesn't happen, there is a direct loss. So obviously I won't keep on entering shots once it starts going above 8195, but still I would not be like long and without worries, uh, because this is not a good location to go long and be carefree and have a good night's sleep, because auction generally tends to reverse from these areas. So it can do both. It can come into this in January when it opens. It can come push through 215 again, and maybe 230 again, and try to uh, balance a while and then start its move up with a trend change. And once it starts entering into this zone, uh, again the same thing, which the behavior which it is doing at the lower end, it will start doing at the higher end. Either it will go into this and reject, or it will accept into this and push through this in one go, and again go back to the 8800 kind of zone. So this the likelihood of going to 8800 is as good as the likelihood of coming back and breaking the lows, either rejecting again and coming back and populating this area as a whole. Because now once it starts populating this, the chances are high that the next time it comes into this and rejects, it would try to push into this, but it will not have that kind of momentum to push into this zone completely. So what it will do is, if it fails here again and tries to push up, what it will do, it might get entangled here and try to populate this zone between 8300 to 8600, and then at that time we'll have to review it again, that we'll have enough fresh information to deal with. So I would not like to have mental targets, specific targets in mind and just play for that. This is just a broader scenario, because markets are very visual. You can just find it out through this way of drawing the balances. So this is just based as per that, and most likely till now it has always played like this, and this time also the chances are fair that it would do like that. And on the other hand, once it pushes through this, again we need to review it there, that does it want to push lower into this, reject and fall back up and start going up, or start grinding into this range. It can do that also, and it can reverse back up also. And on the other hand, it can start accepting lower into the 7600 zone, and then try to probe into this is the fairest price. If you can maybe a bit higher. So if you consider this zone and this fairest price, so around 7100 kind of zone, 7100, 7150 kind of zone. So that can also happen, and it can also get the fall can get arrested. In case it is falling further down from here, it can get arrested into this zone as well, around 7500. So one step at a time. There is a lot of information on the lower side to deal with when it starts probing down. But as a broader picture, we would like consider this as, let me just draw once, that we'll consider either it goes into this, so it travels back up and pushes back down and goes into this, or starts accepting here and pushes into this zone, starts to reject there or starts to accept and pushes to 8,800. And on the lower side, uh, either rejects here and pushes back up or starts accepting within and pushes back down into the 7650 7670 kind of zone, either pushes down and rejects and goes back into this range and starts rotating, or pushes down, goes into this 7500 kind of zone and starts rotating, or pushes down even further into the 7150 kind of zone. So this is the broader scenario which I will be looking at through the year, unless and until it is not going way beyond this levels. I think these levels are fairly what it will probe during the entire year. Now that is about the broad perspective and the weekly and monthly that we saw. And now let's drill to micro composite profiles and what happened, why it came down when it broke the Brexit low, what was the scenario that was shaping up. So this is again a volume profile starting with that day after demonetization. And if you can see that red line, which is the fairest price, the highest volume generated across all these auction prices. Now let's take this profile forward. Now see the value area shifted down till here, just the value area low is shifting down, and it already is matching with the yearly VWAP. This is the yearly VWAP, and it started merging with that yearly VWAP. But if you see, all of a sudden it shifts down completely. So now the fairest price has shifted down, and if you can see, there is a nice balance happening here. And one way to change trend is create a balance, break out from that, come back and check the fairest price of that balance and start a opposite move, which exactly happened here. But that is not a long term reversal, because this time frame, this is a 30-minute chart, it won't give you a long term reversal. For that you need to step up the time frame. Now let's keep on plotting this. If you see, this point of control has shifted up, and that means it is saying that the higher prices are being accepted now. It's still up, shifts further up, higher prices are still accepted. Now the value area low started moving up. Now if you see, when the auction made a new low, the point of control is still up there, and that means when you have a balance here and a rejection of that, again you see there is a balance here. So what we were talking earlier, that when there is a balance, see here there is a balance, you have a balance here, so it breaks out of that, again rotates and pushes through this balance in one go, then again creates a balance, pushes up, comes back in, creates a balance, breaks out and reaches the fairest price to close the year. So a very orderly and a very organized auction behavior, and very simple to understand. It is so visual that we don't need any complicated studies, any complicated indicators. Just this, the essence of value area formation is more than enough to understand the auction process. So now let's see how it ended. So it has ended exactly at the fairest price, highest volume at price which was there. Now, going forward, we need to see the behavior of this, how it is shifting. Because till we are within this range, the auction stays the same. We do not need to plot another composite profile. There will be many micro composites within that. All these micro composites I prefer to draw time based. They are all TPO based. And these composites are volume based because I want to see the volume behavior over a much larger period of time. And specifically, while it takes time, it generates a lot of volume, and that information is much more useful than just using a daily or weekly volume profile. So I prefer a composite volume profile and a micro composite TPO profile. Also, if you see, the monthly VWAP, which was trending down, went sideways in December and finally started drifting down. Now, in January 2017, the first thing we need to observe is how the VWAP behaves. Is the VWAP continuously rising above the December VWAP? And also, the December VWAP high is here. So, somewhere in 8250 zone. So, we need to see if the VWAP starts developing above that, is also a sign of reversal, that the monthly VWAP was continuously trending down. You already have a yearly VWAP lower, so that is a very good support. And if the VWAP starts building up, that means the trades being done, the average price of the trades being done is that. And when the average price is higher, obviously the auction would want to move further up and go into previously established fair prices. Here we have previously established fair prices, so we can take that as a reference. And also, if you see the yearly standard deviation of the VWAP is at 8608. So what we were looking at on those charts, the weekly and monthly, almost matches here. So everywhere, wherever we do any sort of study, it will eventually match at some point in time. And that's why what we saw just through candlesticks is more than enough to assess the longer term trend and to assess what can it do in the year 2017. So I think that is it, and we'll do a review every quarter to see, and we'll look at the same charts to see how the charts shaped up ahead, and what was the behavior, whether it did what we expected or was it completely different to what we expect. So we'll keep on reviewing that, so everyone gets better insights and gets that belief that this works over a longer period of time. I'll leave you with this, and thanks for being there. Thanks for watching, and Happy New Year, and have a good trading year. Wonderful, profitable, healthy, and wealthy trading year ahead. Thanks.